Here we are in our first example, and we are on gold daily chart. Now, following my phases of price series, you may notice what we're expecting after we have a large expansion like this. We're looking for a new phase of price. So with that, if we're looking for either a retracement or a reversal, ideally we don't get caught in a consolidation. Where are we looking for that to occur? Well, since this isn't a reversal candle, I'm going to be looking for price to take out its previous candle's high and then form a reversal here to trade lower. Now, if this next candle is going to support expansion, what do we want to see? Do we want to see a wick that is small, that then we can trade it lower? Or do we want to see a large wick? Well, we want to see a small wick if we're going to actually trade that lower because it allows it to expand. If we have a large wick, then we're better off either looking back towards the daily open or trading the following day for a continuation. Let's drop down to the lower time frames to see what it looks like. So here we are in the next candle, and you notice we also can use the phases of price on the hourly chart, and that's personally my favorite for the daily time frame. We have expansion into consolidation. So if our idea is to trade lower, what do we want to see with consolidation? Expansion, consolidation, expansion out of this range, met with expansion back in, forming a reversal to then trade it back lower. So let's see when we engage with this high. There we see. We have expansion into the high and expansion back lower. That is what's forming that wick there. Now marking out the series of up close candles there, we can go ahead and move one candle ahead, and my indicator will do so because it now has the early change in the state of delivery feature. But we have a protected high here now. So we can anticipate that this daily has formed its wick, and it is a small wick which supports expansion lower. So where can we look for this to trade to? We can use the EQ of the previous day for a target, or liquidity. What would liquidity be? Previous day's highs and lows. So that can be a target as well. Let's see how this works out. And you can see, there we go, and get that expansion lower. So just to review, what are we looking for? If we're trying to trade a reversal day, we want to see if it supports expansion. This candle does, as it has a change in the state of delivery intraday, forming a small wick on the daily time frame. This allows it to form its wick early enough into the day to expand throughout the day. Now, if we go and replay this example, and let's say the daily candle looked something like this, right? We had a super large wick that already had most of its daily range. Do we really expect price to expand all the way down here? Not really, because that is such a large range. So that is why we are looking for that small wick to support expansion. So here